there is money available, huge amounts of money available in the corporate world, including at Berkshire, to push forward on opportunities. We're spending money where we see opportunity, and we spent lots of money in the railroad business. We spent lots of money in the energy business, and we built plants elsewhere and did other things. But so it's not a lack of capital at all that's holding back, nor is it tax rates, in my view, that are holding back at all investment. I mean, this country prospered in the 50s and the 60s when the corporate rate was 52% and people actually paid it. And it was when it was cut to 48%, we all rejoiced. And our GDP per capita grew. So it is not a factor holding back. I will tell you, I mean, corporate tax rates last year were 1.2% of GDP. Medical costs were 17 and a fraction percent of GDP. And there we have at least a 7 percentage point disadvantage against the rest of the world, which is a big multiple of all the corporate taxes paid. The actual taxes paid were about 13% of profits, as I remember. So the corporate rate is 35%, and last year you were allowed to write off 100% of most kinds of fixed asset purchases. I don't think the corporate profits are not the problem, or corporate balance sheets or corporate liquidity is not the problem in the economy moving. I mean, if you ask me about the tapeworm of American industry, it's basically our medical costs. We've got a huge cost disadvantage against the rest of the world. Now that's unbelievably tough to address, but that is where, as Willie Sutton would say, that's where the money is. And you can fiddle around with corporate tax rates. I don't think that will have any big effect on the economy. You may achieve greater fairness within the corporate tax code. I wouldn't argue about that at all. And incidentally, the Treasury, I think both parties agree that they would like to see a lower overall corporate tax rate, but one that applies more equally across corporations. But getting from here to there is going to be very, very difficult, because it's fine when you talk about it in the terms I just used, but once you put specific proposals out, everyone whose tax rate is going to go up, and some of them have to go up if others are going to go down. Everyone whose tax rate is going to go up will fight with an intensity against that bill that far outstrips the intensity with which those on the other side fight. It's a real complex problem that way. But corporate tax rates are not our country's problems.